Good evening, ladies and gentlemen. And today is 2nd of February 2025. Yesterday, Budget 2025 has been presented. I did not post a video on Thursday and Friday this time, as there were so many videos floating around on the budget speculations. And after the budget itself, there are so many videos about the increase in the tax slabs and the 12 lakh and 4 lakh confusion. However, we are here not to speculate. We are here to talk about trading strangles and earn profits, right? After all, if there is income, then only there can be income tax, right? So this week we earned a profit of 0.4% again, and for the month of January, the total profit has been very nearly 2%. For the weekly performance, you can see the previous videos and also join our Telegram channel to see the live updates. The description is the link is there in the description. Coming to the budget day itself, we had a very simple strategy of far OTM strangle at 25,000 CE and 21,500 PE, as we just aimed to target the volatility crash at the end of the event. And in case of a major movement, we intended to dovetail those positions into our weekly positions, and so that after the budget speech itself, the volatility started going down, and we earned another 0.4% of profit on the budget day itself. However, that forms part of this week, so that will be coming in the weekly review of the this week, which is coming on Thursday/Friday. So, broadly speaking, now there have been no major boost to the stock market as such. No cuts in corporate taxes, no change in long-term or short-term capital gains or STT. No major negatives as well. Just a focus to increase the liquidity and stimulate consumption in the economy by reducing the taxes of the middle class. Now, RBI has also been thinking on the similar lines, as you are aware, as per their announcement in a few days back. So what does this mean to us from the trading perspective? Well, firstly, traders are happy that the big event is over. It is because in the last 2 weeks, the VIX increased from 14 to 19 level, and it makes all option selling strategies difficult. Why? Let's understand technically what happens. So this is your payoff chart, and these are the strike prices that you sold, and this upper line shows that what will be your profit and loss in case the market moves to these points or particular point on the expiry day. Underneath, there is a blue dotted line, which is also called T+0 line, and this shows that what will be a profit or loss today if the market moves up and down to these extents today. Right. So the advanced traders will already know this, but there are a lot of new traders also. So it is very important to understand the payoff diagram correctly. So if the volatility if our adjustment points, which are in between, are breached by the market, then the MTM loss incurred is more than the usual, right? When the market is not trading with an increased VIX and such situation, now that becomes a challenge. And also, the moment the volatility reduces, the T+0 line automatically shifts upwards. Now that becomes beneficial to our overall position. So last 2 weeks were challenging, and when the VIX moved up from 14 to 19, and still the strategy earned us around 0.8%. And also now, with the budget out of the way, we can trade in peace. That's the implication of budget for us. Now coming to the weekly positions and our adjustments. Okay, so coming to Friday, well, the market was as usual. The spot was around 23,100, 23,128 to be precise, and we took the new strangle, which we normally take around on Friday. We go about 1,500 points down and 1,200 points up, and we have our adjustment trigger points 300 points down and 225 points up. And this is how it looks like on the chart. This is how we mark it. The dark line are the exact strangle, and the dotted lines are the adjustment points. So anyway, on this day the triggers were not touched, and since the VIX was already high around 17, so we had good premium, and by the end of the day there was a good premium decay. Triggers were not touched. We took the positions overnight. Coming to the next day, which was Monday, and here again we saw the Gift Nifty was indicating around 170 points gap down, and indeed the markets gap down. So as such, we were supposed to adjust our position at 925, and for Mondays we have the gap of 1200 on the downside and 900 points on the upside. So we took the new strangle at 23,900C and 21,700B. Adjustment trigger points are, as you can see on the screen, are on the same distance. This is how it looked like, and you can see the clear gap down there on Monday, but we were still in profit. So if you can see in the P&L section, we were still in profit despite the gap down, and on this day also the triggers were not touched, so we took the position overnight. However, the VIX has jumped up around 7.5%. It was okay overall. So next was coming to the Tuesday, and Tuesday again we took the position at around the market was at 22,900 again, and on Tuesday we further closing the gap, we take it 900 point on the downside and 675 points on the upside. So these were the the strangle which we took, and these were the adjustment points, and this you can see are as marked on the chart itself. And on this day, you can see that still we were in good profit, and the max profit has also jumped up quite a bit to 0.5%, but it was not to happen because market was quite volatile for the next two part. As we can see that by around, if you can see the time, it is around the market, here if you can see the payoff chart has become skewed, right? So this is what my message also says. If you can see the bottom of the screen, that this is what we have shared in the Telegram channel, that payoff chart has become slightly skewed. Rebalancing may be required, and we had to rebalance it at around 2:40 in the afternoon. So we closed the old strangle, but we maintained the same distance, and so the new strangle was at 23,950 and 22,200, and we kept the adjustment points again. However, market had moved up. However, the market foxed us again. As you can see here in our Telegram, we did mention. What was the move? This was the move. The move was a reverse N-shape move, and as you can see that the moment we made that particular adjustment, market moved down like anything. And in 2 15-minute candles, it was pretty late, around 2:45, it moved by 223 points down, and it again went below 23,000 level. Anyway, and despite all of this, the positions didn't suffer much. We didn't see any red. So we decided to take the positions overnight, as the triggers were not touched. However, since it went in the opposite direction to our adjustment, we decided that we might be required to make the adjustment at 9:25 on Wednesday. Now, Wednesday we generally don't make any adjustment unless there is a shift. We don't reduce the range. We keep it at 900 points down and 675 points up only. But coming to Wednesday, this was the situation, and as said, we usually do not make a change, but 2:45 last day we had a major move in the opposite direction. Despite that, we were at, before the adjustment, around 0.2%. Weekly MTM profit was already there. So this was the position we took at 925, as you can see, and we kept the same range of 900 and 675, and this was the adjustment trigger point. This is how it looked like on the chart, and this was after the adjustment was done. You can see the MTM got reduced, max profit also got reduced. Okay. However, at this point of time, there was a lot of turmoil and things which were shown in the market. So obviously, safety of our capital is of paramount importance. Another data point, if I want to show you, was towards the Wednesday end, and this is what is called a rolling point straddle or rolling straddle. This is actually the combined premium of the ATM call and put, and it generally indicates that how much volatility is expected in the market. So usually the value of the ATM call and put combined on a Wednesday closing should be around 150 in the normal scenario. Here it was around 290. It was almost double that. So in the end, Wednesday end, we decided that we should adjust and leave the position. So we adjusted our position 23,900C and 22,250P, and we had a peaceful Wednesday night sleep for that matter. So coming to the next day, which was Thursday, and on this day again, as we said, we would like to be a little bit more cautious. On Thursdays, we usually take the position around 550 points down and 400 points up. This time we went a bit wider. Obviously, it was an expiry before the budget, so anything could have happened. And around 9:25, the Nifty spot was around 23,169. We deployed the new strangle at 23,600 and 22,500, and these were the trigger points, 23,400 and 22,800. However, we did adjust before that, and I'll show you why, because the I think it may not be visible very clearly, but on the top you can see the ATM straddle premium once again. It reduced from the previous day to 94, but it was still high. It was around, if I'm not wrong, around 270 or so. So yes, there was a move that could have been anticipated. Now at the same time, in the morning 1 hour itself, the MTM had improved, but the PF chart has again become skewed. And why it happens, I had told you previously that this is because of the rising VIX or rising volatility. The T+0 line starts moving down. At the same time, the two standard deviations, that is 1 sigma and 2 sigma, they started moving outward. So any minor move will get your payoff chart pretty skewed. Okay. So anyway, that's part and part of this thing. More important is that you should keep that tent of your strangle adjusted, and we decided we'll take a adjustment if the market crosses 23,250. 23,250 and 23,300 were good important levels. It went through 23,250, but it didn't breach 23,300. It did so momentarily, but it came down and started moving down after that. So we adjusted when it, I think, touched 23,300. We adjusted, and immediately the market reversed from that position. And what happened thereafter was that it moved down, and thereafter it moved within that range. So that was, I think, the end of the major movements in the market on the expiry day of Thursday. And most importantly, we did took some opportunity trading also. We closed in the Strangle bit, and it did improve our potential profit from 0.3% to 0.4%, not much. And this, since this was not as per the strategy, we didn't update it in our Telegram immediately because I thought it was a risky trade and people following should not take such risk. What is the difference between 0.3% and 0.4%? And they have a different adjustment strategy altogether, wherein I roll out to the next week. Anyway, we did fairly well for that day and finished at 0.4% of the weekly profit. And with that, for the month of January, we did finish at around 2% for January. And these are the trades of January which I'm sharing with you. You can see that the PNL for each of the week, it is almost ranging. One we had around 60k. Apart from that, every week it has crossed around 1 lakh or so. So that's not important. Important is it the percentage that was maintained. So overall, it was around 2% for the month. And let's go to the next part. So in a nutshell, in the previous video, we had discussed about the three key aspects to approach the trading. One is capital management, second is strategy itself, and the third was the tax management. In the present budget and this tax cut which we have got, this helps you in the third aspect, that is the tax management. So if you have not seen that video, I would suggest you go ahead and see that video. And finally, it's not just about focusing on the strategy and keep focusing on the strategy itself and trying to find what more fancy strategy we can get, and with more difficult and complex adjustments and all that. A simple strategy like Strangle can earn you good profit, and that you are seeing week after week, right? Yes, a few tweaks are required here and there, that we keep on learning. And if you're new, I would insist you to watch the previous videos, and one would realize that you don't require to be an expert or have a secret strategy to earn money from the market. A simple strategy like Strangle with simple adjustments can give you consistent profit from the market. For any additional support, you can join our community, small traders community, the free Telegram channel for the live updates which I post every day. The link is in the description. So that's all for this week. See you next time. Thank you.